Good morning and welcome to Man Over Market. This is a live trading session for Tuesday, March 17th, 2015. It's 10 a.m. Central Standard Time. Lewis Borsellino, author of The Day Trader, From the Pit to the PC, will be sharing his charts and proprietary indicators during this session. Even though this is a live broadcast, please be aware that there's about a 30-second delay in the video transmission. Also, Man Over Market, and I have a extra window open, so I apologize, and I'm going to stop that as soon as I can find it. There we go. Apologies for that. The disclaimer here is trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or most of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. The following information is an expression of our opinions and is provided for educational purposes only. And now, here's Lewis Borsellino.
Hi, good morning, everyone. As you can see, I'm sharing this screen with you right now, and I drew this sort of resistance for today. We just finished bracket D. We tried to go out and take the top of the range, and I think, as I told you this morning, we have this, we've got all the single prints down here, but with the FOMC meeting, I don't know if they're going to do this today or they're going to wait to whipsaw us tomorrow. So right now we do have a negative bias, and looks like we took out the Globex low. I'm looking for to see if we're going to take this low out again. All right, let me see. So we're going through the bottom of value right now, which is 2065 or 2060.75. Okay, we did now just cross the center line again. All right, we went from red to gray back to red. Okay, so we got to see if we're going to be able to take this the Globex low out again. Bookmap had some orders here at 61, this area, and they haven't they filled them. These got filled. They didn't pull them. I don't see any other big orders. We got about at 58. We got about 800 contracts there. So, as I said today, I thought that they would go take a run at the single prints, and then I thought that they would, rally back by the end of the day. So, we're getting a shot at the lower part of the range. We did spend some time up here at 3.5 and finally failed 3.5 to 4.25. So that's what I'm looking at. Here's the cash market. Finally, we're getting some tick down in the cash. The S&P, that's a 1-minute cash. Okay. Let me see here. Oh, we had to reboot. Let me see if the NASDAQ. The NASDAQ has the 5-minute positive on the day. The Dow. The NASDAQ is taking a run at its 5-minute pivot as I'm talking. I'll put it right down here in front of you. Here's the NASDAQ taking a run at the 5-minute pivot. We had taken out the 5-minute pivot, and it's down here at 57.5. 57.5. So we got to see if we take this out. All right. That's going to be that'll be key to the rest of the rally or the rest of the break. And let's see if we get some momentum with the NASDAQ. The Russell also is positive. Not that the Russell really means a lot to me, but, it is an index. So let's see what happens with the NASDAQ here. I'll leave this up for you to see it. Bookmap's gotten some orders in at 58.5, about 1,800, 58. Even, 7.5 and 7 even. So some orders have come back in. And go to the CME website, see what volume has been split. See how we are with the volume.
500,000 still trading in March.
All right, so we're about 800 in the
June.
You mean the June? Yeah,
500.
500 in the March still.
Yep.
So there's still a significant amount of volume being done in the June to keep this thing a little whippy. Let's see what happens with the NASDAQ. If we get the NASDAQ going our way, I think then they'll definitely go down and try to take out those single prints, which I've just showed you down to here. And right now, currently, we are at 1.5 times the IB range at 2058.75. 2058.75. This is, let's see if they get another push down, especially on the second set of only 6 minutes into the bracket. 6 minutes into the bracket. I'm a little slow today, people. I had to get up early in the morning, drive my daughter to the airport. Nice life she has. She's been 15 days in San Diego. All right, we're crossing the center line. We're getting to the oversold area. Okay, let's see what happens here. On the 8 evens are there. I'll put this up for you. Here's what Bookmap looks like right now. So they got some orders in here. Fire the questions away. I'm sorry, this is not. This will be 1.5 times the range, which is 2054.5. 2054.5. I told you I'm moving slow. Moving slow. Also, 2057.5 would be our 5-minute pivot. Okay. NASDAQ looking like it wants to take out the 5-minute pivot. There's the Russell making a move down. Now remember, when I talked to you about the 5-minute pivot, this is not a floor pivot. This is the pivot that Pat's developed and I've developed, and we've been using for about 15 years. There's different settings we put on them, and we've been looking at it. So we've programmed this. This is something you can't get on TOS. It's something that we have already programmed. And you need to have a 5-minute close below the price. Below the price. Just touching it doesn't mean anything. It has to get a close below the price. So that's what we're looking at. So right now everything is kind of looking pointed down. I'm surprised we have this much action with the FOMC meetings being released tomorrow, and I'm seriously was surprised that we're having even this much action. One of the things I said this morning also is I thought, now this is starting to look unfinished to me, right? This is going to be balanced in here, and I thought the top was unfinished. So I had thought that we'd go down and make a shot for the single prints and then rally by the end of the day, sort of like what we did on Friday. All right. So I'm just in a wait and see mode right here. We need NASDAQ to join the party. If NASDAQ joins the party, it'll give us a little inf to go down, and we need to take out the 5-minute pivot also. So that's where we're at. Any questions so far?
Lewis, you talk a lot about impulse trades. What are they, and how do you prevent them?
All right, I'll give you an impulse trade right here. See this? The 5-minute pivot right there. Thinking, oh my God, it's going to go through here, and once they get through, there's going to be a ton of stops. So you get short right there. That's an impulse trade, right? We should be looking now. Let's see, what is the current low? The current low. We're talking right now. The current low is 8.5. Give me a 3.25. So NASDAQ didn't take it out. We got our moving averages. They went back, tried to touch each other. They're sort of, now descending.
Minus or a plus?
Plus from the low.
2061.75.
All right, so our rotation now, our 5-minute rotation is 3.25. So this thing could rally up to 61.75 off the low. Okay. Now where would that put us? And now the Nasdaq didn't take out the 5-minute pivot. The Dow is down 114, and the Nasdaq's down 4, and we're down 875. So the Dow has sort of been the leader. So 175 would bring us back to what area? Right here, 175, the bottom of this resistance zone right here. So that's if you're talking about a smart trade, right? If you got this in this area, you wanted to short it, you're looking at basically around 2 even, and you got to stop right here above 4.25. 5, actually that's 5 even, right? And that would be a 2-point risk, and hopefully that would give us the emphasis to go down and fill in the single prints, which is 53. So it'll almost give you like 800-point objective on the downside. So those are the kind of setups you want to look at. You don't want to jump in, because, and then you take a look at here, right here, okay? This is one of the things, when we make this available to you, it'll keep you out of it. Like right now, with this thing going straight down, okay, we've got 1, 2, 3, 4 lower closes, which is what we like to see, right? We're going to need a little pullback. We need a little pullback, okay, or a little pause, because when we take a look at it, we're actually at the with the current range, we're at what we call, this is our standard deviation, 2 standard deviation away from the VWAP, which is the volume weighted average price. Okay, this dotted line here. Okay, so we're probably going to get a little bit of a pause, in which we've had, and this thing is bending up, right? So on the 1-minute chart, remember the charts are fractal in nature, so this is gave us a little indication that we're going to get this little pause here. Okay, so that's what I would call an impulse trade. You see all these bright red lines going at the pivot, and you're gonna maybe before you've been watching it, and all of a sudden it gets through that, and you go, nuts, I'm gonna hit stops there, So, and then what do? You end up selling it right into that, and the next thing you know, it's 200 points against you. So that's an impulse trade.
Okay. In the morning, you discussed a support box on the chart. Please explain further.
Who's asking that? All right.
Quebec.
I knew Quebec. She's still the new support box. Quebec is right here, 2064 to 2061.75. That's my new support, and it's a calculation I make based on profile movement, and it's still in beta for me. How's that?
Okay. What is the definition of single prints, and how do you use them?
Okay. All right. So single prints are, you see all this letter B going up here? Now remember one thing too, yeah. Single prints only mean going forward, not going back. Okay? So you can see that we had single prints from yesterday's opening, 53.75, all the way up to basically 20.62.25. All right, and then in bracket D, well, actually we had them even more, but so, and we need a letter to print next to B. Okay, now it doesn't have to be the same day. So last night we came down and we covered up all these single prints to 60.75 right here. Okay, right here. So now this morning we've covered the single prints all the way up to 20.58 half. 20.58 half. So what we got left is from 20.58 half All right, so you see all these single prints with no corresponding letter across from it, okay? But these have corresponding letters across because they covered them up here, okay? So there's no corresponding letter across, except. So we're looking for 58 half and down to 53 half. Now, single prints are an animal unto themselves because they usually do get covered up, but it doesn't mean that it can happen like right now. It could happen a month from now, 2 months from now, you know. But when you're in a market that has a clear direction, you're looking I use these as targets, right? So my target, first of all, is going to be 1.5 times the IB range now that we're inside the IB range, okay? All right. And while we're talking about it, let's just put the IB range up, okay? Here's the IB range. All right. The high of bracket B, okay? The high of bracket B and the low of bracket B. It's usually the high and low of bracket B and C, but C was contained into B. So C didn't make any movement higher or lower. So I'm sorry. And so the first hour range is the IB range, the first hour range, okay? So C was a non-factor, okay? Because it had a high of 2064, okay? And it had a low of 2060, and B's range was lower on both ends. So that's the IB range, the first hour, okay? All right, let me see what we're doing here. Let me take this out. Did that answer the single prick question? All right. All right, NASDAQ, come on. Let's see if we get a print. What time is it? 10:17. We got about 3 minutes left. Okay. All right, here we go, book map. Got order bids at 6 half, 6 even.
Got a question on bookmap while you have it up.
Go ahead.
Those white bands on bookmap, are those areas where the market might sell or buy larger participants?
Yes, exactly. That's where and see, I can do this with bookmap. Watch this. I can take the shading and I can say, okay, I want to see nothing but large orders. Okay. So right now, these guys are 1,300 on the bid, 1,200 on the bid. So right between 6 half and to 6 even, we've got 1,300, 2,100, about 3,500 contracts on the bid. Now, if I want to see more, I can do this. Okay, that's more sensitivity. Gives you 75% of the info. I leave it set right about here, just under 25%. I don't really care about everybody else. I want to see where some big guys want to get out. That's what I want to see. Or it becomes a target for me. I don't use bookmark. The only thing I use it as to kind of, I use it to kind of confirm what's going on in my frame of thought, right? If I was short, I'd be looking to, and I was short multiple contracts, I'd be looking to is this as a target? Now you can see they're canceling this. They're pulling there. All right. All right. A lot of them, half of those orders got canceled. That's why the white went away. These guys are still there. All right. All right. Now, I hope that we'll get back to that. We're waiting right now to see what happens with the NASDAQ. We got a minute left, and the S&P and the 5-minute pivot. Okay. We want to see if they're going to get taken out. And all right. So we got the 2 dots now. You see this? Boom, boom, and boom, 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 boom. All right, the 5-minute pivot, it's gone for the NASDAQ. It's now in. That, for me, means that our short-term bias is now to the downside. Now, let me see what I can do to double-check that, right? All right, so now my new target, people, Okay. My new target is 51.40, but oh wait, I gotta put this back together. Hold on. I'm gonna put this back together. Let's get together. I can't sing worth shit. Here, 20.54 half, okay, is going to be the that is 24.54 half is 1.5 times the IB range, and then our last single print is going to be 20.5375. But okay, then we got some of these from the overnight session 2 nights ago. All right, not as important as the day session for me. Not as important. Okay, and I've got a little gap in my data here. I don't think that was meant to be. So, all right. Okay, we're getting a little pullback in bracket E now. How much time? We got 9 minutes left in bracket E. Now, everyone probably said, oh my God, the 5-minute pivot's gone. The 5-minute pivot's gone. It just means the trend has changed, and you want to look for a place that would be a better short. Okay, it's not like you got to jump on it right there. It just means the trend has changed. Okay, and you want to and remember when we told you before, when we look for things like this, right? 5 minutes down, 5 minutes down, 5 minutes down, little exhaustion here. Okay, continued 5 minutes down. All right, we'll probably get a little pullback, right? And then you want the trend to continue going that way, right? So here's the Russell, still is not in a sell. The problem is that you like to get these things all moving at the same time, and the Dow and the S&P, here's the Dow, has kind of gotten to got to the oversold area a little bit. So they're going to get a breath here. So these markets are taking breaths at different times. It's great when they're all moving the same way, but you want them to be moving sort of, when they're all getting killed, you want them all to be getting killed together. All right. So now it's our new low, Anthony. Our new low now is 56.25. So let's talk about 3 rotations, 3.25. Puts us like 59 something, right? Then I look now, and I look at when I look at the profile, I see things like this, and I go, all right, we're going to have to fill these in. The odds are that we're going to fill. To me, we're going to do 1.5 times the IB range, okay, and we'll probably fill in this range. But then, the further we keep going in bracket E, down, which we got 7 minutes left, then we're going to have a retracement up this way, right? So those are the things that really drive people crazy in this market, because you go, well, I know it's going to get here, but so let me get short, and then it rallies up to here first, and then you get out, you get stopped out, and then it breaks, and then you get short again, and it rallies. And then you go, I'm not going to do that again, and you get long, and then it goes and takes out the spot. Okay, I'm not making that up. That's because that's happened to me my whole life, right? So
20.59 half, so rotation up.
All right, 20.59 half. So we want to be looking at 20.59 half as see how the market reacts there, right? So if we start going back there, we got 20.59 half. All right. To me, that's logical. But look here. If we get, if this happens in the next bracket, which we got 5 minutes, and we go to 20.59 half, 1 rotation, I'm going to think that they're not going to leave this space from 59 half right here up to 60.75. I think they'll fill that in. Okay. So those are the things that you have to look at and see. All right, I've got to see how the market's going to behave when we get 1 rotation off. 1 rotation off. Okay.
Where do you get the mode currently?
Where do I have the mode currently? It is at right up here, 2063, 2063 even. And that's moved around a couple times today, I think. It was here, then here, and then here, 2064, and now it is at 2063 even. Come on, go back together. All right. We're at a quarter. We got 4 minutes left in this bracket. And so for the people that are not profile users or first time they've ever seen it, these letters represent the first 30 minutes. Now, years ago when profile was first invented by Stottlemyre, it just used to mean price, okay? Now, this is price with volume associated with it. So when I look over here, I have, at this price, we've had 52,961 trades at 20.67.5. Not today, but since this contract's traded, that's how much it has traded. All right. And the important thing about that is we want to see where there are high volume nodes and low volume nodes. Okay. So right here, these are all low volume nodes. You see this? There's hardly anything printed here. Nothing's printed here, as compared to, and we're, because we're in a new contract too, right? We're in a new contract, as compared to, like, you see this has a lot of volume here. It has 3 bars, okay? And here, okay, now we've got 2 bars, 2 bars, 2 bars. And at the bottom where we're looking, there's only 1 bar, right? So the market profile gurus, which I am not one. I'm not a guru. I use it, but there's plenty of stuff I don't know about it. But they basically say that the market moves from low volume nodes to high volume nodes. Low volume nodes to high volume nodes. That's the way the market moves. So, all right, any more questions?
They want to know what's the market profile you're using.
I use Inside Edge. Go to our website, and there's probably, what, 8, 9 videos?
Yeah.
There's about 10 videos about all the different charts, because I only use the F2, but he's got an F4, an F5, an F3, and they all have different sort of just different ways to look at profile. Okay, one's a candlestick, and so on. So and there's a great Charlie Cochran, who posts on our site. We've known him about 20 years. He was one of the first guys to use volume market profile. Back in 2002, the Merck started printing volume real time and electronically. So whatever was being printed on the screen or on the E-minis, they started printing volume real time. You didn't have to wait to the end of the day, and it wasn't a guesstimate like it was in the pit. In the pit, it was basically a guess at what the volume was based on the number of trades and what we did for the day. So, which is nice to know. When you're getting volume real time, that's helpful. Now, so when people talk about the mode, all right, the mode means that right now today, the most volume traded occurred at this price, 2063. And that made sense, because I mean we were up there, and all right. So now we're in bracket F, right? And what was that first rotation? It was going to be 1 rotations.
2059.5.
2059.5. Now, and now we're starting to leave this little gap here, right? So the question is, will we go back up to around 2060.75 and fail? Are we going to go down and take out bracket E first, cover the single prints, then go back? All right, and that's why, you know, I don't, you know, right here it's like, okay, well, let me flip a coin, let me get short, okay, and if it rallies, I'll stop myself out, right? What was the high of that rally? Um, what's been the high since then? Let me see here. Right here is the high. So we rallied to about 2059.5. So that's almost the whole 3.25. All right. So if this market's going to keep going down, we need it to go down and take out this low. It needs to go down and take out that low. All right. We got our CCI getting back above where it's, you know, where it wasn't oversold anymore. All right. So we got that little breath, that little pause. We've had 1, 2, 3, okay, a doji, 4, and then, so we got to see what happens here. We're going to have, is that the pattern? Why don't you shut that door? Oh, you did, okay. All right.
Okay. They want to know now, they see that they broke the 5-minute pivot. How do you assess where to enter without just getting it? You know?
Like I said, I would be looking for my rotations, right? Okay. So, you know, the one rotation is going to be up in this area here, right? Okay. But if bracket F kind of fills up to bracket E, okay, which it fills the bracket E and fails, all right, that's, you know, there's where you're kind of playing the odds right there, okay. I look at my 1 minute chart here, 60.75, okay. I'm looking at my CCI right here, okay. I want to see this stop pointing up. I want to see it sort of start rounding or flattening out. I got my moving averages here. These are not just a moving average. There's a combination of moving averages here. They're still pointing down and heading down. All right. We got to our exhaustion dots here. So, you know, you're assessing right here, right? You're assessing. Here's book map. These guys think it could go to 60.5, 61. Lot of orders up there. 1, 2, 3, 4, 5, 6. 6,000 there. This is the closest thing that I ever saw that we had in the pit, because, you know, that was the whole thing, right? We were standing in the pit, and all of a sudden they get to a price, and an order flow would open his mouth. You know, he'd be yelling at, they'd be going at this, he'd be going 1,500, 1,500, and all of a sudden all the locals go 1,250, 1,000 and even. You know, they wanted to sell in front of these guys, okay, and, you know, use these orders to kind of lean against them, right? And here's the worst thing about electronic trading. You got this, but, you know, even in the pit, that 1,500 in the heyday could have been me. That could have been me putting an order in, telling people, yeah, telling an order filler, hey, put an order at 1,500. And I was really trying to buy 9.5s. So everybody starts jumping in front of that guy, and I start buying them. So, you know, these guys play the same game. Now, the Merc has rules now about spoofing, I guess they call it. So I don't know how well they are going to be about enforcing those rules, right? But, you know, here's the kind of things we got to look at. We're getting a little bit of a pullback. Now, will the pullback be enough to start taking this out? Okay. Is it slowing down here? Here's the CCI. We're into only into the first 5 minutes of bracket F. We still got this little gap here. All right. my experience is telling me I think that it could rally all the way back up to here, 61.70. Okay, because I think we're going to end up with 4 letters across in the market profile today. This evenly middle that's been evenly distributed here is kind of telling me that we're getting a 2-sided trade today, and it's going to distribute on both ends. So the key is how do I keep myself out of trouble, because I don't think we're getting a trend day down. We're gonna get to the extremes, right? Which I think I said this last week. If you're a market profile person, right, you should be buying it at the extremes and looking for the market to move back to the middle, because in reality we only get about 4 trend days a month. Okay, so it becomes, you know, how much pain you want to sit through and so on. So like we've gotten, since we made the low, we've gotten this basically 1, 2, 3, 4, 5, 6, 7, 8, about 9, almost 9, 10 minutes of consolidation between 9 even and 0 even. All right.
All right. John wants to talk a little bit about your psychology. He said he acts as a very responsive trader when he trades. He wants you to talk a little bit about like the psychology when you're entering.
You mean like
you know, he jumps on a trade reel, you know?
Yeah. We look, I wish that what we were trading wasn't money, because if it wasn't money, you wouldn't be so psychotic about the trade. I'm not saying you are, John, but we all are, right? The most difficult things about the trade is as soon as you put it on, all right, you're looking at the dome. And as soon as the dome goes negative, you go, I'm wrong, right? So I try to tell people, you gotta, look, if you've done your homework and you're making good, rational decisions, okay, then it's no different than any business that you've ever did before. You have to do your homework, make a rational decision. Look, I just gave you the psychology. I'm looking for the first pullback. We've gotten here. I want this to flatten out. I got this still going down. I had my 5-minute pivot taken out. All right. I've had 1, 2, 3, 4 higher closes, but we didn't take out 175 area. Okay. So that's all good for me, thinking the market still can move down, right? All right. And then I look at, okay, this guy's still sitting down here. He's a target for me. There's a lot of guys up here offering. Maybe they'll try to spoof it up to here, but the percentages for me is that the market is moving down. So there's the psychology, gentlemen and ladies and gentlemen. There's only, if there's 100 of you on here, I know I only have 10 women on here, so 10%. So.
Okay. What indicator are you using on the left with the yellow dots?
That's the cash. That's the S&P. So it's the actual cash. So that is the ADSPDC. If you go to, I don't know, I know that on TOS, that's how they, so that's the S&P 500 cash. So when I look at it, we opened up, we rallied, we came down, okay, and then after we did this, we were sort of like, we keep, making new lows, right? And this is counting the lows, right? So that's what I'm looking at. That's the cash. That's a funny indicator. It's great because sometimes it's the leader and sometimes it's not. But I can tell you one thing. This can't go too far without it. Okay? Can't go there. So we're getting rounded, right? So if some of you took this short up in here, you're looking good. And if you don't want to sit through some heat, you could probably just put your stop back to the entry, right? Okay? Now we want this to rounded, cross back down, all right? Go take out the low, and you'll be a happy camper, right?
How far back do you take your market profile?
You know what? This is 180 days, but I know there's some guys out there. I know I met with him once. I think his name is Borad. He uses the recent, the most significant highs and lows in the profile. So like he would be using the high from the all-time high in maybe December 16th, 14th to 14. So I don't look at it that to me 5 days. I like to check 5 days of mode activity and 10 days, but the most 5 day mode activity is the most important thing for me. So, and it makes sense. I mean, if you're day trading this stuff, the 180 days of profile is really not anything that you really got to be looking at. So, but that's just the way the software's set up, and I leave it set up there. All right, 7.5. Remember, 6 even is what we got to take out. All right.
Our buddy out in Madison wants to know how many trades you've taken today.
13.
Round terms?
Yeah.
13 round terms.
Not a lot. I got to answer that guy. He's a cop. I don't want no trouble when I go through Madison.
Okay. CL is breaking lower on low volume. Do you expect them to move lower, or can it continue unless higher volume is drawn in?
Is that Casino Girl?
Nope.
Come on. Here's CL. Whoa, hold on a second. I want everybody to go back and start listening to the videos that I was putting out in October of last year and January, and Pat and I, when oil was at like $75, we said it was going to 50. Actually, Pat said when it was at 100, it was going to 50. And I've been saying the whole time, I think crude oil is going to it's going to make a really stupid low, like $20, like $25, and then we'll know it's over. Okay, it's going to have to make a stupid low. So I think that didn't the crude report come out today? I thought there was a petroleum report today.
I think so.
Here's the profile for oil. Okay.
Not today.
This was or is that tomorrow? So that Globex low right there is not out yet. I take it. Let me look at this. I think that I think right now, with it being above 43.27, okay, it has a chance to go back and rally up in this area. 43.80.
It comes out tomorrow at 9:30.
Okay. All right. So, especially in front of a number, I think people are going to be flattening out. So it's making us suffer here, right? If you're short, it's making you suffer. We're coming on now the second 15 minutes. And I would say that the first 15 minutes, we moved down. So if the market is not ready to go down, you'll see it now, and they'll go fill in the second tier in the second 15 minutes. Also, this is stopped rallying and kind of flattened out. But these are not overdone. They are slowly ascending down.
Our buddy Eddie over at Top Step Trader says there's a natural gas report on Thursday also.
Okay.
You know.
If you guys are not following Eddie, you should be following Eddie. He's awesome with the news and updates, and usually gets it out before everybody else. So that's what you want.
He's joined in too live here today.
Great.
Yeah.
Oh my! It's already 10:45.
Yep.
You kidding me?
Eddie also wants to know when I'm gonna have my own show.
Anthony should get his own show. You see how handsome this kid is? He had to do it today. He did it. He had to fill in for Uncle Lou, and basically, they said the only difference was that my voice is deeper and gravelly, gravelly voice, and I say horseshit trade and the damn Greeks. That was my prediction, is that the Greeks will be thrown out of the European Union shortly. The Germans are really mad at them right now.
Okay, so which is more important, the auction market profile with the brackets or the volume profile?
For the way I use it, I like the volume profile. You know, I like this chart right here. And you know what? I'm going to be honest with you. I don't know what you call this. I like this. Out of all the things that we use, I like this better than anything, all the other market profiles. To me, it kind of. So remember when I told you I thought that this could, you know, and here's one of the things I've, you know, for the last year and a half watching this thing. Okay, all right. It spent the first 15 minutes in a 30-minute bracket trying to move lower, didn't take out this low, all right? So let's see how far it retraces. And because this is not filled in, this bracket F is going to fill this in. It's going to fill it in. I believe it's going to fill this in, okay? And then the issue becomes, will it go all the way up to here, 6170, which would make sense to me because when I go back to all right, so now we go back to here, right? Look where the value area low is at, right? 2060.75, right? So will the market try to get back inside the value area low? Basically, will it try to get back inside value? And then another failure and rejection there may be the emphasis, the momentum you're going to need to go down and fill in these single prints, right? So,
about 10 minutes. You want to tell us?
How about any other questions?
We covered pretty much everything.
It's, and when you get a day before the, FOMC, I think that it's not surprising me that we're going to get two-sided action today, because yesterday were a bunch of longs. All right, I think we're going to get the week longs shaken out, and then I think they'll rally it back closer to unchanged, and the market will await Miss Yellen's testimony or whatever she has to say. Now, here's what I have to say about that. And I'll bring it to the story that I'm going to tell today. Did anybody get a chance to read? Was it posted up?
Take a look. I put out the link to the blog. So
okay. So I'm going to tell the story. There's a lot of graphic language in it, but I am telling the story of the Friday before Black Monday. So if you haven't read my book, the Friday before Black Monday, I was actually departing and leaving for Europe. Hold on a second. Let me stop sharing so you can see my faccia, as we say in Italian. Right there. Stop right there. Okay. There's a faccia. I don't say faccia brutte. Faccia brutte means very ugly. I say faccia bella, which I'm good looking. There you go. And this is good looking. This is good looking right here. See that? That's good looking. All right. So anyway, and this is what bothers me about right now. Okay. I mean, maybe I'm just becoming an old man, or I'm just too used to what I experienced, right? So when I first started trading, interest rates were 20%. Gold was at $850 an ounce. And we had double-digit inflation. Okay? So I started trading in 81. So in my lifetime, I've seen interest rates go from 20 to 0. My intuition and gut feeling is that it has to move back to the median, right? The market should move back to the median when it comes to interest rates. Now, 1987, I left Friday, and I traded in the morning, left short 20 contracts, and I was short 20 big S&Ps. I was up 125G on the position. I get to the airport, and people basically, there was a lot of cell phones being used, and especially if were not being used in public, right? And I was at the gate waiting to get on a plane to go to New York, and then New York we were going to Switzerland. So I call the exchange, and I'm on the phone with Joni, and I go, Joan, where's the market at? You can read our conversation. It's pretty accurate. Also, so she goes, you're up about 200,000. I go, are you kidding me? She goes, no. The market broke 1,000 points since you left. She goes, it's 500 points from limit down. Back down, we had the limits. They were like 2,500 points. I believe are pretty accurate. So I go, all right, here's what we're going to do. I want to flatten out before the weekend because I think we're going to get a big rally on Monday. Boy, was I wrong. But anyway, in fact, if I would have let that 20 lot on, it was worth about $1 million. I think a 20 lot was $1 million trade come Monday at the close. Anyway, so I basically what I did was says, look, you're going to work three things. You're going to put a stop in at I think 2,400, so 2,400 versus where are we at now? I'm sorry. We're at 20,058. So we were in the 2000s at the time. So anyway, I told him to put the stop in at 24 OCO limit down, OCO MOC. All right. So basically, I had 3 areas that I wanted to get out at. All right. And but I want to talk about that week. The market had extremely volatile, and we were experiencing moves like most of you younger people don't understand. A 50 point move in the Dow was front headline news. A 35 point move in the Dow was headline news. When I first started trading this, I remember when the Dow went through 1,000. It actually sat in a 200 point range for like 20 years. So that market up till Friday had retraced 10% from the highs. So, of course, I go, well, people look for these 10% corrections. And then everybody knows what happened on Black Monday, which will be the topic of my next little conversations, my conversations in Europe when I found out that the market the Dow went down 500 points in one day. So, but here's the difference. Interest rates were like 9 to 10% at the time. 9 to 10%. So what could the Fed do? I can tell you what they did because I was sitting in Jack Sanders' office, who was the chairman of the MERC. I had $4.5 million sitting in my trading account. And I said to him, I'd like to get a check. And he said to me, well, that's not possible right now. And I go, what do you mean that's not possible right now? He goes, the exchange and all the clearing firms are having a little trouble meeting margin calls. I swear to you. And it was Alan Greenspan on the other side of that phone call. And he said, don't worry, Jack. We're gonna provide liquidity. We're gonna provide liquidity. That means they were gonna lower interest rates and basically lend money to the clearing firms to make sure that nobody had a problem, right? And all I could think back remembering that meeting was how do I get long bonds? Because there was no overnight trading then. So I was already thinking, let me see if I could get long. But my biggest fear right now is the whole world is stimulating. The Chinese, the Japanese, India, Europe, we experiment with it. We're escaping right now, and this is what I said about it before. We are escaping because we were the first to do the quantitative easing shell game. You know, where's the P? I don't know. Where's the P? Is it under here? All right. So we started printing money, buying our own bonds. Then we started saying, oh, yeah, we're getting better. We're not buying the bonds when they were really buying the bonds because they were lending the money to our banks, and then our banks were buying the bonds. And that's why the banks still aren't lending money, because they had to buy the bonds that the Fed wasn't buying. They were buying 90 billion, then they went to 80 billion, 70 billion, and so on. Well, right now, and this is my whole argument about interest rates, right now we're financing our debt at zero, and other people are buying our bonds. Europe, China, the Japanese, Central America, they're buying our bonds because there's a flight to quality right now. So my question is, why do we have to raise rates? We don't even have inflation yet. So that's my theory about that. But anyway, that's what's so scary to me about the market. And, you know, I lived through the 1987 crash and I lived through the 2000 crash. So, you know, the Fed had some bullets. They don't have any bullets anymore. If this fails, we're going to have a problem. And I know I sound like every other doom and gloom guy out there, but I just don't know what they're going to do unless they're just going to give us money, which would be nice, you know. Okay, we're gonna give every American. All right, here's another 10,000. We'll just print more money. As Pat Tabbitt says, the stimulus will be over as soon as we run out of trees and we can't print money anymore. So that's my little story for today. Any more questions? We got about 3 minutes left.
Okay, Lewis, with the S&P being the biggest instrument, most volume, why is it so hard to trade?
You know what? It has the most noise. It has the most noise because I could tell you, you know, and it's because everybody uses it and they use it differently. There are long-term players. There are short-term players. There's these computer algorithm guys, the high-frequency guys, which, in my opinion, they should be unplugged. They should not be in the market. Okay, and the market's got a real problem now. I don't know. The Nasdaq just announced it's going to trade energy futures in its own futures contract, and what's going to happen with that is they're going to trade it for 20 cents a side. Now, if they lose the ES, which I don't think they will, but if people decide not to trade this contract, they're going to have to become more competitive, right? So to answer your question, is that so many people use it as a hedging tool, not just a trading tool, right? Option people are hedging. You got long-term players that have to be in the market, so instead of buying the stocks, they use this, right? And then, you know, so that's the problem. There's a lot of noise based on what the participants look like, right? So, you know, we go back to this whole thing, right? We're sitting in this thing. We're still in bracket F. You know, remember I told you I thought bracket F would fill in this little up to here. You got about a minute left, okay? So now this is telling me, all right, the new bracket will come out and it will most likely move up to here. It may even go back to the mode, and then that will take you out of, you know, if you're short. Here you go, bracket F. I'm sorry, bracket G. It's going to fill in there.
Go ahead and share your screen with us, Lewis, so we can see what you're doing.
FOMC days. I kind of sit on the sidelines, or I put stupid offers out and stupid bids, way off the market. I look at them in that fashion. So here's
You gotta share your screen.
Oh, I'm sorry. Let me put this back on for you. So this guy's still down here at 57. He hasn't moved. These guys are up here at 61.5 to 62, which we've talked about, right? Now, we've crossed the center line, okay? We're still red, cross the center line, okay? And we're trying to get back inside value.
Time for one more now.
Yeah, go ahead.
Lewis, thank you for sharing your knowledge and experience. Do you ever add to a winning position once you've entered?
I wish I said no. But you know, I gotta tell you, in the old days, yes, a lot. But something about the way this market moves now, it's really hard to buy breakouts and sell them now. It seems to me that the market stops much quicker now. But yes, you know, when you think you're invincible, you do those things. And I'll tell you when you think you're invincible, when your timing is so good that you never sit through any pain, or you got 8 or 9 winning days in a row, or maybe 2 or 3 winning months in a row, then you think, oh my God, you know, I'm done. I got this. I'm done. I got it. And then, hello, you give back, like, you know, 3 days in one trade. So I'm looking at this now. It's you know, it's trying to get through here. I still you know, they're not gonna just say, oh, let's go get the low out of there. I know, that's what's so hard about it, right? That's what's so hard about it. All right, it looks like we're time's up. As usual, I enjoy doing this. I hope you're learning something, and good luck. I'll talk to you later. Bye.